I'm joined by David Kenney. David is one of the top accountants, if not the best. I think he's the best in the startup and corporate, both startup and corporate space. He's been around for about 20 years. He's advised lots and lots of companies, from whether it's pubs and clubs to tech companies to tourism to everything that you can think of under the sun. And he is really, really renowned within, especially our startup ecosystem, because he's been focusing into helping people achieve great business growth. And David's a great friend of mine and a mentor to me. So David, thank you so much for joining in the call.
Thank you, Mel.
I will be your host today. I will be posing all the questions and everything that's on our mind. I'm a startup founder myself. I run an IT agency where we help people adopt 100% technology, or we build any kind of applications that's needed for businesses. And I guess more than ever now, we're working with a lot of businesses to go 100% online. So that's a little bit about me. So question, and I think the most important one, David, is who is exactly eligible for this 100K cashback stimulus package?
Yeah, look, just a quick one, Mel. I'm a bit frustrated with how it's been promoted as $100,000 worth of money for everybody. That's, it's one of those times that you really need clarity. And unfortunately, I really don't think very many people are going to be getting $100,000 when you look at the landscape of businesses that are going to be able to access this. But we'll go through that. Some of the key rules are it starts on the 12th of March. You know that it's for people that are doing PAYG, paying PAYG, and for reference, that is the tax that you withhold on employees' salaries. We'll get to, there's a lot of confusion on PAYG installments and what does it really mean. And it's going to be, the mechanism is going to be claimed through your business activity statement, and it's going to be broken down into, obviously, there's monthly remitters of PAYG and GST, etc., on a monthly basis, and then there's also people on the quarterly collection system as well. And I'm going to try, and the best way to do this is, rather than just regurgitate the information, I'm going to give you an example of how that looks. Right, so the way it works for everybody is it starts with looking at what category you're in. So the first thing is you need to be registered at the 12th of March to be inside the system. So this isn't for new businesses that start now, it's for businesses that are already commenced, they're registered. There is, unfortunately, a slight bit of ambiguity in the legislation registered and having an ABN, which more people have an ABN than are registered for PAYG. But let's on the basis assume that you're registered for PAYG as well, and you're a monthly remitter. The reason you're a monthly remitter is that you have more than $25,000 worth of PAYG withheld from your staff. Therefore, you have to file a BAS. Or in this case, I'm not going to use all the technical jargon, but the very next instalment activity statement, or BAS, you're going to lodge as your March 1. That March 1 is going to be where you claim, it's distracting me. The March BAS is where you're going to be, it's the first time you're going to be able to claim this credit. So I wanted to set out an example. So take, for example, a company that has $12,000 worth of PAYG. The way the very first, so in the top left box, there you can see the way the system works for monthly remitters only is that you get a credit of 3 times the amount of PAYG that you have withheld in that month. So take, for example, someone who had withheld $12,000 from salaries for their employees. That is multiplied by 3 to give you $36,000, and that is your credit. Now, the credit for the purposes of the calculation is the maximum of either 3 times the PAYG or $50,000. And in our case, it's $36,000.
So if it's only up to 50,000, you can get up to the credit maximum.
Correct.
In the whole 3 months, right? In the whole 3 months, or
across the 3 months, you can get $50,000. The next 3 months, March, April, May, you can get $50,000.
March, April, May. Okay.
Yep. Now, the way it works is that you've got a credit of $36,000 in this case, but this same company had sales and net GST payable of $10,000. So now the company didn't have any GST, but this example I'm saying is $10,000 worth of GST. In this scenario, the $36,000 credit minus the PAYG, which must be still paid because it's a credit only, and then you also have a GST liability of $10,000, is going to leave you a balance of $14,000. That can be refunded into your bank account. So for goodness sake, make sure, for those of you who are normally paying the PAYG or GST, make sure you've got your bank account details on your business activity statement so that you can get the money as soon as possible. I can see some questions coming through, but I was going to follow up.
What happens if you are below the 10K minimum of pay as you go? We will cover that shortly. If you are remitting under the 10K, you will fall into quarterly, and we will cover that scenario as well. Right now, we are covering what happens on a monthly basis. Now, David, would it be correct for me to assume the 3 times 12K that you're saying that we get a credit? Is that just for the months of January and February as to why they chose the number 3 times multiple of the month of March credit? Is that?
The policy, Mel, is that people need a little bit more help now.
Okay.
And so they're saying for the first month, which the earliest time you can lodge your BAS is on the 1st of April, then you can, you get 3 times the credit. And possibly that might be the largest month anyway, in case people are being laid off.
Yeah.
So the $12,000, the first month, March, and let me say this is only for monthly people. They get 3 times the credit of the PAYG, and that is a credit that's then offset against the liability. So you're still technically paying your $12,000. So you've got a residual $24,000 credit, and then you've got to pay the GST. So because there's no holiday on that GST where you're using a credit, then you're going to get a refund of $14,000.
Okay, so it's only for the month of March, for clarity, that you're getting this 3 times, and it's only if you are one of those bigger and larger companies that remit more than that has obligation to remit monthly. What if we didn't cover this last time, David?
Correct. So this is for people that have more than $25,000 of PAYG a year paying. They must file their PAYG, IAS or BAS monthly. So in that same company's example, we've got the next month, we've got $10,000 worth of PAYG, and there is no premium this time. So we get a credit equal to the amount of PAYG that we owe.
Okay.
And then, but that same company has got less sales and has now got an $8,000 GST liability.
Okay.
Now, in this case, instead of paying the $8,000, we can automatically defer the payment of that GST. So we don't have to pay anything in the April installment, but what will happen is the income tax, the balance, it won't be payable, but we'll have used up a further $10,000. So in the first quarter, we've used up 36,000 of the 50. Sorry, in the first month, we've used up 36. The second month, we've used up 10,000. So we've only got 4,000 left. So in the May payment, we've got a further $4,000 we can get a credit for.
Okay.
And then going forward, after...
So we just come back here, the 4K that is left.
Yeah.
So are you saying that the credit is obviously up to 50,000? So we've used up 36K in March. then
Yep.
we've used another 10K, 46,000. And
Yep.
you're saying that that's why there's $4,000 left for the next month
Yes.
in
For the
April, because you've
for the
used
May
up,
one.
yeah, for May, because you've used up 36K,
Correct.
10K, and 4K. And in the first 3 months, you can only get 50,000 worth of credit. So that's why that is.
Correct.
But something that's really interesting, I think we should highlight, is even here, this is a different policy, that GST can be completely deferred for 6 months, which is
Correct.
which has also been announced. So not only do you get the benefit of this pay-as-you-go credit, but separately GST may be deferred.
Correct. Ultimately, that's got to be paid at some stage,
Yeah.
assuming you come through. And there's no interest on the deferral of the GST, Andrew. No, you can. During this period, it's very clear that any GIC is not applicable for any debts incurred after the 23rd of January. So that goes back even further.
So I guess the question is, okay, so this is for the people that have to submit pay-as-you-go that's well over the threshold. What about those that are under the 10K pay-as-you-go threshold?
Just quickly to finish off on the monthlies, Mel, if that's okay. So going forward, after May, you've done your May BAS, then it resets. You get a further $50,000. But remember, I said in the March BAS, the multiplier of 3 is only relevant in that month only. So then after that, you get 1/4 of the $50,000 spread evenly over the next 4 months rather. So if you've got surplus in June, they can carry forward, but you have 50,000 that can be used between June and September. So that finishes us off on the March BAS, the monthly remitters. And I think I spotted a question about if you are in arrears. If you're in arrears, then again, putting the PAYG or GST on hold is something that the ATO is accepting at the moment. They're getting the specific coverage of the GST and any tax liabilities. The ATO is happily freezing at the moment. Specifically, what is caught is that 6-month deferral, but in tax policy at the ATO, they're allowing people to defer any and all payments at the moment. But it's mandated they must do 6 months. Switching now to the quarterly, and remember, this is for the smaller PAYG people. This is for people who really want to not do a lot of additional work, in the sense that they don't want to do monthly BASs and get credits all the time, and do extra paperwork. And I will come back to some of those questions, Mel. But just to finish off for those that are doing quarterly, because a lot of you will be doing quarterly. In this example, we've got $5,000 worth of the PAYG. The minimum credit in this case is $10,000. If the payroll was more than, or the PAYG was more than 5, it would go up to, match that figure, and again could go above 10. But the question is, because you are supposed to be under 25 for the whole year, it's not going to be a lot, more than whatever it is, $6,000 or $7,000 anyway, unless you're trying to lodge quarterly when you're supposed to be lodging monthly. So that $5,000 will be used, offset against that $10,000, and you'll have a $5,000 credit. But in the same company having a $10,000 GST liability, the overall tax position will be $5,000 payable, but you can defer that for 6 months.
Okay, so David, can we just cover this again? So in here, even if this pay-as-you-go submission that I only, it was only $500, say, that I needed to submit, would I still be eligible then for the 10K credit?
Correct. It's a minimum of $10,000, and a maximum of 50 overall, but the minimum is the relevant one here, because the way it works is that it's the maximum of the amount of tax that you withhold in PAYG, or $50,000, whichever is the lower. So in this case, it's $5,000 is the PAYG, and $10,000 is the minimum credit for everybody.
Okay, so even if, for example, right now, if I haven't paid myself a wage as yet, but I was always going to be paying a wage because my business was performing the last quarter and I was getting into that. If I paid myself a salary where I had to do pay as you go, you're saying at that point, I could automatically have access to 10K credit from the government.
Yeah. Yeah, if you, for example, were the only employee and you hadn't paid yourself in that previous quarter, then you could declare a wage. You might even declare a wage of, up to $18,000 for the year. There's no PAYG at all. You'll still get $10,000. The minimum credit people will get, if it's monthly or quarterly, is $10,000. That's just how it works.
So you're saying even if I didn't even have a pay-as-you-go obligation, like I didn't pay any tax on my employees and I only had an employee that was getting only 18,000, or myself, I was getting 18,000, I'm still able to get access to the 10K credit?
Yeah, if there was no GS, well, firstly, yeah, you can still, if you're paying, you've got to be paying someone.
Yes.
The salary. It's to keep people in salary. The whole concept is to pay staff.
That's right.
There's no minimum PAYG. If you have one employee, so answering Jay's question, if there's no, if you've only got one employee, and you're paying that person $18,000 per annum, there is zero requirement to withhold any tax.
Yes.
But you will get a $10,000 credit. Wow. So a lot of people in Sydney startups could be maybe pre-revenue. So they will get, in that case, $10,000 back. So it's a sensible thing to look at. Should you pay yourself? I mean, I was having a conversation the other day with a founder saying, should I just close my business? And I said, well, $10,000 is more than Centrelink.
Yeah.
Right? So someone who's building a company is going to be entitled to $10,000.
Yeah.
Batten down the hatches. It's going to take you a while to get $10,000 worth of Centrelink payments.
That's right. So, David, what about some of us that, have started generating and seeing good money for the last 3 months? Because as you know, like in my business, I've shared with you, we were having some great months in the last 3 months, and I was I was taking salary, but that I wasn't lodged for pay as you go. I was going to go through and have my accountant, obviously yourself, do all that stuff. So what do we do now? Because we are obviously registered for ABN, but the whole pay as you go thing was maybe new to us on how we would operate the tax vehicle and everything like that. So what would your suggestion be now to all of us? And many
100%, of us. Mel. A lot of people, 100%, Mel. A lot of founders are bootstrapping and not paying themselves a dollar. If they're registered, if they've got any salaries at all, I'll deal with your question too, Kirsty. I'm trying to listen to Mel and read questions at the same time. So if it's just you as the founder and you have no employees, start paying yourself a salary, right? Start paying yourself, you get that credit. It's not taxable, that credit. You never have to give it back. It's yours forever. Secondly, if you, there is, as I said at the start of the call, a tiny little bit of confusion as to whether or not you need to be registered and have an ABN and be registered for GST and registered for PAYG. That is a no-brainer. If all three of those apply at the 12th of March, you'll be well entitled to claim that $10,000. There is there's some commentary on the ATO website which talks about being registered for PAYG, but in the legislation it talks about having an ABN. Now this legislation's been rushed through pretty fast. The legislation to any, and this, I'll just make a 2-second qualification that most of the things the ATO are doing are administrative. So they can do the administrative things without legislation, because they've got general powers. But things that become law are being rushed through the Parliament as we speak. So there's normally drafting errors, let alone in this hasty environment. So I'd say the better interpretation is to pay yourself, go through the system. Your worst case scenarios are going to knock you back if you're not registered already at 12th of March for PAYG. But I believe that the better interpretation is the ATO will probably push that through. The definition of registering, Melinda, is going on the ATO portal, and you can register for PAYG effective at a certain date. And if you make it the 1st of March, I don't know that their system will be that advanced, because before today, if you were registered, as long as by the end of the month you were registered, you're allowed to withhold tax. You're not supposed to withhold tax, as in withhold salary or PAYG withholding from salaries, unless you are registered. So as a result, if you go on now, my suggestion would be go on and register at 1st of March, for example, and say, well, I'm going to be paying myself this month. Then I'd suggest you do that.
What about like in June? You said we can get another 10K. Like how many quarters can we get up to, and what can we all get up to if we start doing our paying ourselves, or paying our employees? Like, what's the max for us?
The maximum is $50,000 per up till June, and then again from June onwards there's a further $50,000. But because the credit relates to PAYG, it's unlikely quarterly payers, because they're already limited to $25,000 for the whole year. And now, unless they're lodging quarterly when they are paying much more than $25,000 in PAYG withholding for the whole year, and they should have been caught in the monthly scheme or the monthly remittance scheme, then it's unlikely anyone paying quarterly is going to get a $50,000 benefit. Me being trying to work out who is ever going to get $50,000 in benefits in that first quarter, the only way to possibly come close is I think if you had $17,000 worth of PAYG, you multiply that by 3, you're going to have a liability. Let's say you've got no revenue and you've got so $50,000 worth of credit, but you've got the 17, so you're roughly paying about $33,000. You're going to get $33,000 back. That's the absolute most I think anyone is going to get at the moment, as in cash back.
But in June, if I continue to pay myself, as in of the 18,000 that you suggested, would we get again another 10,000?
Yes, we do. We get another 10,000 in June.
So we have to start paying ourselves right now in order to, even if to get these benefits, essentially. Yes,
correct.
Otherwise, we're going to miss out on 10,000 if we don't start paying ourselves and registering our ABN. And we had a question you saw where someone has been paying salary and of 2,500, and he wasn't registered for pay as you go. So
if you've been paying a salary, you should have been registered. So as I said before, if you only you as the director know if you've been paying a salary. If you're paying something you regard as a salary, you ought to be registered. So I think you try and run that argument to say, if they are being so stringent to say you weren't registered for PAYG, I think you say, look, that was an oversight. I should have been, and I don't want to break the law. I should be registered for PAYG, and I am now retrospectively registering for when I started paying salaries. Now, bear in mind too, if you do pay salaries to anyone, don't forget about superannuation, and don't forget about workers' compensation. So just a quick qualification there. Clearly, you're not going to sue yourself if you have an accident, but having said that, stranger things have happened.
Okay, I'll try and there's a lot of questions. I'll try and put them to you quickly so you can get to as many as possible. So someone wants to know the definition of what is it actually mean to be registering for pay-as-you-go? Is this like a quarterly BAS submission and issuing pay-as-you-go?
I think I answered that question. By saying you need to go onto the tax portal and register.
Yes.
And
Thank you.
Yep, so that one's covered. I think I noticed someone else.
Okay, the next one. If we have 3 founders, can 2 founders who are not being paid claim the job seeker, and one of us pay?
Yes, if they're terminated. If they're, so one of the, well, I'm actually going to cover strategies for employees and DSS benefits a little bit later. If I can do that all together, it'll make a lot more sense for everybody. If that's okay.
Confirming, if we are paying monthly and we will take up the 50K credit in March, the next 50K would be received in June, correct?
Yes. So if you're quarterly,
yeah,
it goes March and June. They're your BASs you lodge, because you lodge BASs. Having said that, you might opt into monthly for GST if you're normally getting a refund. So a lot of you that are bootstrapping, that are spending money and don't have any revenue, instead of you trying to save the hassle of doing a BAS every month, jump in and do a monthly BAS and get your money back slightly faster if you're spending anything of any substance.
Yeah, perfect.
So,
yeah, so I think that's right, Jackie. If you claim
what else have we got there, Mel?
Jackie said, if you get the full 50K in March, you can't claim again in April and May, because she's on a monthly situation, because you've claimed your full 50K credit.
No.
Is that right?
Yeah, it's 50,000. Correct. Yeah, so it's 50,000.
50,000 credit in March, so she doesn't have any more left to claim in April and May. That's
yeah. It starts again in June, Jackie.
That's right. Perfect.
And instead of you getting the 50,000 up front, you have to get 12,500 a quarter, a month rather.
What about directors taking drawings that were made into a salary at the end of the year?
Yeah, that's fine. In fact, I would say that's a strategic thing for anyone that's worried about the solvency of their company. That if the company goes into liquidation, you don't want to have a position where you've got to pay back those loans. You might decide to declare salary and wages. You're going to get a credit for that salary and wages, and you'll actually find that. So instead of you having to normally worry about paying income tax and go, well, I've got to come up with the whole lot. This is an opportunity for you to essentially get the PAYG covered on the tax that you would otherwise have paid. So that's one of the strategies I was going to mention a bit later. It's a good question.
This is a really good question. I think you took it on our previous one, but it's I've always been quarterly, but I'm now over the 25K annual. Should I switch to monthly to get the benefit of 3 times?
Yeah, I think so, because if you can go monthly now, sorry, Lillian, or Mel, can you come back to Lillian? Yes, I'd say so. Come back to March, only because you get that 3 times hit. You get the triple whammy of the credit in that March month. That's the only time you get an accelerated amount. So I'd be trying to revert. So put yourself on the March, so the monthly cycle, so that the ATO won't argue that you're claiming the 3 times credit.
Perfect. Okay, Lillian, I missed Lillian, sorry. I'm a sole trader. I'm registered with
I think we missed Lillian's question. No?
Yeah, I'm going to Lillian now. I'm a sole trader. I'm registered with ABN and GST monthly. If I register for pay-as-you-go tomorrow and start paying myself, can I be eligible for the 10K credit? Which I think you said that's exactly right. You can.
Well, it depends. Like if you're a sole trader, technically you don't pay yourself a salary. You are a sole trader. That's one of the things about having, you are not technically an employee. You can have employees who are not yourself, obviously, but paying yourself may not be possible. You might be able to pay someone else doing work in your group or your family if they're doing some work. That might be, and as I said, if it's only a very minor amount of work that they're doing, provided it's commercial, there's a $10,000 benefit for you.
Okay. So sole traders registered.
You're welcome, Lily.
Okay. So is that clear? Just to clarify, the 10K credit we receive, do we do we minus the GST payable for that quarter from the 10K?
Yes.
Okay, perfect.
Unfortunately, if you owed money, you could defer it, but anything you owe will reduce that credit. It's a credit, not a refund. It's a credit.
Thank you. I would like a list of exactly what is it, all the things we need to do if we are currently a startup and not paying ourselves, so I can make sure I've ticked all the boxes and I can get access to this 10K.
Okay, I will put together a little flyer on what to do for people getting in the system.
Yeah.
And
okay.
I'll share that on.
As a basic, it's obviously like you need an ABN, you need yourself registered for pay as you go.
You're welcome,
if you
Carly.
watch like the video. So perfect. Then the next one is okay, again, David, the wages of 2,500, which I mentioned before, were of 2 directors, founders, who are also only the 2 people who work the business. Do we still register for pay as you go? Apologies, I just want to make sure.
Yes, you should be. If you're paying yourself anything, you need to register. Even if you don't have to withhold, you need to register.
Okay.
If you're paying salaries, you must register. If you aren't above the threshold, you don't need to withhold, but you must register.
Okay. Can I get an example of the wage that would make 33,000 pay as you go for quarterly BAS to maximize the stimulus amount? Coming from an owner that hasn't taken a wage yet, my husband and I are employed but take owner drawings at the end of the year, but pay an apprentice pay as you go 1,500 a quarter.
Geez, you're putting my maths to hard work. Let me get my calculator. Actually, my phone.
What would be
up around the 200,000 mark as an annual salary to be withholding $8,000 each to, if there's just 2 of you. I mean, that's rough maths. I can do it more.
No, thank you, David.
Easily with a calculator. Or I can even Google it and say how much, if I multiply $8,500, and you can do this with Google anyway.
Thank you. I'm on a monthly BAS. Used to be over 25K. Now I'm not quite at 25K pay as you go, but still on a monthly submitter. Does that mean I'm entitled to that extra credit of up to 50K because I'm still on that monthly submitter?
If you're monthly, even if you're not supposed to be, if you are on the system of monthly, you could have already opted in to be monthly, but it doesn't help people if they're quarterly. It doesn't help people if they don't have much PAYG. That's why the misnomer of, I mean, the whole thing is that people are getting up to $100,000, but the percentage of people who are going to go anywhere near that is a fraction, because the biggest companies might be people that are turning over $30, $40 million. They might get $100,000, but as a percentage of their risk, that's peanuts. What I'm worried about is who's going to employ anyone after all this.
Yeah. Can you please re-explain the monthly versus quarterly pay-as-you-go benefit again?
Yep. So the monthly benefit is for the month of March, whatever you have withheld from salaries is your PAYG liability. Multiply that by 3 and that becomes a credit. Provided that credit does not exceed $50,000, that's your credit. Then subtract any other liabilities like GST or something like that.
Okay.
Oh, is that you, mate? David Jones, you cheeky bugger.
Okay, perfect. I'm also sharing. Okay, so I think that's it. That's all the questions.
Obviously, you're fanboying Matt.
Okay, so basically we're going to wrap it up. Thank you so much, David, for sharing every one of all the knowledge. I think it's so much clearer now that you've actually explained it to all of us. Guys, if you want to follow David or me, we're going to be doing more stuff like this. I'm putting our LinkedIn, both of our LinkedIn over here. So make sure that you hit a follow so we can keep sharing this kind of information.
first thing I like to say is a lot of people might be also paying income tax along the way, and that's called PAYG installments. So, for example, for the month of December or September, quarter of September and December last year, you may have already paid some income tax installments. So if you made $100,000 the year before and you have paid $30,000, you might have already paid 2 lots of $7,500 worth of income tax. That's called PAYG installments. One of the things that you should be thinking about now is whether or not for the month, for the year, 30 June 2020, you'll still have a profit. Are you paying income tax on the company faster than you should? So you might be able to look at that and claim that back. That might be $50,000 or more that you can get back straight away. Now, my personal view is, whilst there's normally a penalty that would be applicable if you make a mistake on the estimation, it might be a very I'd be both if there were too many penalties applicable, and perhaps you might even be prepared to try and waive that penalty down the track, because it is something about, it's a real survival issue now. If you can get that money back, maybe that's something you should think about. Another thing is where I think a lot of people should be aware as well, is where they have they're claiming R&D. One of the things that you may be aware of is if after adding back the costs of R&D, so you've got a profit and loss which says you've lost $500,000, but you've claimed $1 million in that in GST, you will have actually a profit of $500,000. So in that scenario, what happens is you only get a credit of 13.5 cents in the dollar on the portion that pushes you into profit, because the R&D add back pushes you into profit, and you only get a 43.5 cent credit on the balance. Being in that case, it might be if we had $100 million worth of R&D, and I had a $500,000 loss, I'd be in $500,000 profit after I added back that cost of the R&D. So in that case, I wouldn't get my full 43.5 cents in the dollar. So this example where we can claim an additional amount of depreciation might just help those folk that are in that category. It's a narrow category. And
can we just talk about that again, David? So this R&D thing, because developers, I know there are some developers right now on the call right now, and myself as well. So say I invested into a particular product, research and development of a particular product for my company, which would be falling under research and dev. So I would have spent, money and time, even my own time, in developing that particular product. Now say I spent $40,000 in research and dev.
Yeah, we'll give you the best way to do it is an example, Mel. So if I had no revenue, but so let's say I've got a profit and loss, which is, it says I've lost $500,000, but I've got $500,000 worth of revenue, but I've also got $1 million worth of R&D claim. So my loss figure on paper is $500,000, but what happens is I have to add back that whole $1 million. That's the GST treatment, the R&D treatment that says you must add back your R&D claim to work out how you determine, do you get a credit or do you get a refund for R&D? Now, to the extent you're above the profit line, so $0 to $500,000, for that bit you'll get only 13.5 cents in the dollar back because you're in profit. The bit below, so the second $500,000 you spent, you'll get the full 43.5 cents. This depreciation might help those people in that category that would push their loss down further by being able to claim the immediate write-off on 2 or 3 pieces of equipment, for example. So it's a thin number of people that might be applicable, but I just wanted to mention that. So they're essentially the main measures that are tax measures. Now, the second thing that I really encourage you to get your act together as quickly as possible, because there's going to be queues of people lining up, and this is coming towards more of the announcements, which is with some of the banks, they're offering the $250,000 loan packages. So being able to borrow $250,000 or up to $250,000, you're still going to need to be able to demonstrate serviceability of your loan. But the good news is, right now, we might not be forecasting great revenue, but in 6 months' time, hopefully we're in a position to be able to demonstrate cash flow. Now, obviously, this is on the basis of you putting a commercial business plan together and having whatever the criteria is. I can send you some links to some of the ones I've looked at that are putting a plan to borrow this $250,000 together. And for the first 6 months, there's zero interest and no repayments applicable for that loan. And the beauty of this is that the reason why it should be a little bit easier at the moment to get this money is because the government will guarantee at least 50% of the loan. So instead of you having to put your house up, for the whole $250,000, the government will guarantee that half of the loan will be covered by them in the event you can't pay it back. The second thing that is in the announcements, or the second of the third thing that's in the announcements, is there's a lot of legal protection measures that are coming in. So people are talking about that there's no insolvent trading during this period, or you can't, if you've incurred a liability, no one can chase you for the money for a while, for 6 months. They've increased the threshold from $2,000 to $20,000 before you can even chase someone for money. Now, all of that's well and good, but you can still have companies appointed liquidators. You've still got to remember, you need to think about what are the personal guarantees you've signed in any of these, in any of your business dealings. So things on leases, on equipment that you've hired. Even some trade suppliers may have snuck in things that you're underwriting your purchases, and that might be something you really need to be careful about. So you really need to think about, what have I signed? What liabilities are going to potentially come back to me? Then superannuation is still needing to be paid. I'm hoping that that's going to be one of the measures that is also deferrable. But at the moment, and I've been watching this space, that superannuation is still payable on the basis that they just haven't changed the policy on that. There's also payroll tax, and I think most of you, but I'm not sure, you can put your hand up or do a note for another state if you like. Each of the states have come out with various concessions, some more generous than others. I think most of you are in New South Wales, so I'll just cover that one in a tiny bit more detail. What they're doing is they're freezing any payroll tax for the rest of the year. Yes, I can cover some Victorian stuff. They're also deferring all collections. So any collections, we're putting on holidays at the moment. They're also providing low interest loans. So anyone that's unlike some people who might have difficulty with outstanding lodgements, and you put yourself on a low interest loan for any outstanding taxes at the moment. We're getting some pretty good deals done at the moment with that. And you might get the impression that I think we haven't got a great deal of response so far, but you'd be right. So apart from putting things on hold and getting a little bit of money and freezing things that you didn't have the money to pay for, you're allowed to access your superannuation as well. So you can access $10,000 immediately before 30 June. And then again on the 1st of July, you can take another $10,000 out of your super fund. That is not taxable, and it doesn't affect any of your limits, etc. So I think I've covered most of the major things, because most of those things, to be honest, the tricky stuff is really the PAYG stuff that I really wanted to make sure you all understood, because it's complicated. I've had to read it a couple of times myself, and everyone's in a hurry, and it's very wordy. So do not for a second feel like there's any silly questions. Please ask away. But so what I wanted to change gears towards now is we've covered the announcement side. The next thing I want to turn to are the strategy stuff. I guess the key things are really how do you deal with employees and your resources generally. first, I just want to make a quick point that it seems to me at the moment that, and we will deal with the employee side, that if one of the major pieces of generosity possibly is that there is an additional $550 in job seeker allowance for a temporary period of up to 6 months. But the reality is that's allowing a single person to earn $1,120 a fortnight. And even though I was thinking about not being an accountant, I couldn't resist the urge to say, well, that's on an annualized basis, $29,120. And that equates to earning $35,000 per annum. So I'm not sure what the government's trying to tell us. Is it get rid of staff, or we're all a lot better off waiting on the dole? But that's a lot of money. And it's in some cases it's a lot more money than a lot of you people on the call are going to get running your businesses, which is pretty tragic. But as I said, coming back to the strategy stuff, so and I'm really just dealing with this from the trenches, because these are the calls that I'm getting constantly, and dealing with it myself as well. So I'm not immune to this problem myself. So it's not just the legislation, it's just what am I doing, what am I telling people, and what am I sharing. So annual leave is one thing. Obviously, people are thinking about saying, hey, how about you take annual leave at the moment? First of all, you can't force people to do that, but obviously this is a time of negotiation. I read yesterday an article on hibernating staff and standing them down and saying, instead of being, sacked, why don't we put you into hibernation? Now, one of the problems in that is that, firstly, standing down people, it seems, is not going to allow them to access job seeker allowance. If they're sort of on hold, they haven't been terminated, unless they're in a specific category, which has generally been affected, like hotels and travel and things like that are directly affected, entertainment, that will get the automatic category, or in certain circumstances where wage or hours have been cut. So permanent employees that have been consented to unpaid leave are quite possibly not going to be entitled to those job seeker allowances. Whereas terminated employees are, but unfortunately, no matter how few people you have, redundancy payments and payouts of minimum conditions in the contract are still applicable. So you're going to have to really be constantly looking at, well, what's my best scenario, what's my best strategy in managing payments. But I think where I'm getting and having conversations with people about helping you get through this and each other through this is working out, even some people can be stood down and say, look, you're the first person that comes back on as soon as I can employ you again. And even giving them access and being able to contribute anything that's going to generate revenue to get your door back open again. But I would also make sure people consider that, and this is something else that I've had, because everyone's very scared at the moment. Personally heartbroken with a lot of stuff I'm seeing. But I always remember this show for a tiniest bit of levity is Married at First Sight. And you see so many people do incredibly stupid things, and you will be judged. If at the end of this, we can remember there's companies like Glassdoor that are going to be the arbiters of what you will like to work for in good and bad times. Remember, you need to look after people as best you can. Or if we are all in this together, no one's caused any of this. Conversations I've had with working spouses, where one person can go on job seeker. One of the founders I had a call with earlier this week, I said, mate, you should pay yourself, start paying yourself, and your wife is entitled to job seeker, and you keep the $10,000. That gives you're not going to get $10,000 on job seeker by closing your company. So take the 10, extend your runway, take the job seeker for your wife. That's the best package for you. The problem is there's nothing online about strategy. it's just all a bunch of history lessons and rubbish. So I just try to really just sharing, one by one, the conversations that I've had over the last, probably 10 days. Working from home, making sure you're ready. But one of the things at the moment I'm finding is that people are forgetting that your employees can sue you if they have an accident at home when they officially working for you at home. So one of the things I've made sure people do is they get an assurance from staff that they can work from home and it is safe. There was a case against Telstra actually about 6 years ago where someone was working from home, sued Telstra and won, being injured in their own home. Obviously being more alert to security and scams, etc. So switching gears from staff to resources, looking at income expectations. So you've got to be on a constant vigilance of looking at triaging income, saying, where am I going to get income from? What are the types of services I can provide? And then also looking at, controlling costs, freezing bank payments, turning off your direct debits as much as possible. And we've covered before loans to directors. That was another scenario. You don't want to be in the position where a liquidator turns around and says, well, you owe $50,000 back to the company. In over the period of the next 6 months, you could pay that out, and with those credits, you won't pay any income tax. So that's something to think about as well. I haven't read that anywhere, but in my opinion, that's perfectly legitimate. Personal guarantees are on the card still. Lots of companies have signed and directors have signed things. But you're constantly doing this, what I'm calling gap analysis of income in and income out. So a lot of people that have got customers and that are owed money, you've got to be looking at, well, what's my rationale on how are those people going to pay? Are you in a position where half of your debtors aren't going to pay you? Get talking to people, negotiating, treat people with respect. They're in the same position, constantly looking at who's negotiable, working out. You're going to be triaging your suppliers and your customers. You're going to be saying, who can I do business with that's going to pay me, without saying that to them. You're going to have a slightly tougher conversation, but being able to then decide how much buffer you might allocate. You might say, I can do a best case and a worst case scenario on my cash flow and say, I've got, $100,000, like you're at the roulette table. You might say, I've got $100,000 I'm prepared to put into my business. And I think on $100,000, I'm going to get through to July, or if I'm lucky, I'm going to get through to September. But you've got to pick a number. Don't do a death by 1,000 cuts and saying, I'm going to put some more money. It's just going to get better. Work it out now. Obviously, it changes on a daily basis, but please start thinking about that. I know you've got a lot on, but this is a really important thing. And then, you need more contact with customers. You really need to have a lot more discussions with them about how their business is going and being respectful of their cash flow and yours. And that, as I said, it's a daily thing, triaging income, working out who can pay you, whose business is more and less affected, triaging suppliers as well. Whose supply is going to be cut? Is your supply going to be cut? I'm suggesting people look at categorizing people into what I'm calling institutional creditors and private creditors. Institutional creditors are people like payroll tax, land tax, telcos, utilities, gas, light, etc. And then private creditors. So private creditors are going to feel the pinch a lot more. So you need to think about that when you're thinking, okay, who am I going to need? Who am I triaging? Who's going to help me? And who am I going to help keep the light on? Because you're going to be, not just your staff, your customers and your suppliers are going to judge you after this. And it's about keeping cool head. And I call this my sanity check on everything. They're trying to get through this as well. And the more you help each other, the better the deals are you're going to get anyway. Looking at whether or not you can renegotiate with the landlords. Obviously, we were hoping to hear that last night, but again, we've got the death by 1,000 cuts, saying, look, we're thinking about what the deal is for landlords, but I think start your own discussions. You can't rely on the government at the moment. You've got to start your own discussions. what are you doing to help people? Be aware that other companies are offering, other property funds are offering amnesties and moratoriums on rent. So, it's again, there will be choices after this. Not everyone's going to be collectible. Every debt's going to be collectible. So I think that some sanity will hopefully prevail in that. If your business is one, and I also say is this, like, think about the conditions we're going into and what do you want your business to look like in a month and in 6 months. You need to be thinking about what that's going to look like and then how to reverse engineer to that. And I know I'm covering a lot of this stuff, and there's I think 25 people on the call, and it's a lot easier face to face, and it's a lot easier with a whiteboard to explain some of this stuff. But just want to give you a bit of a taste of that, and to think, how many people am I going to have? What's my revenue going to be? What is my product? You might even be selling stuff at cost at the moment. You really need to show people that you are not gouging at the moment. A lot of people are gouging and charging premium prices. That's probably not the right thing, because, as I said, you'll be remembered. It's and thinking, is your business one that needs to be around at the end of this 6 months? Is some of the people I'm talking to, they're already at the tail end of the cycle, like printing and companies that are already moving towards being extinct anyway. So think about constantly adding more value to people and working out, is your business one that should be around in 6 months? Hopefully all of you are nodding vigorously. Contemplating as well new opportunities. So with all things, there are opportunities. So looking at new revenue streams. A lot of one customer or one company I was talking to was saying, well, I saw this product. I said, you should be going in and helping people reduce costs. What you do is you are someone who sells a product. And I remember in 91 to 93, when we had that recession, and costs were the paramount at that time. So if you're a startup, I think changing your narrative around what you're selling. It's not about selling a product that's more efficient or this. It's about saving costs at the moment. So if you can replace 3 headcounts, you might actually find you thrive in this market. So if you can save people's OPEX, get rid of 3 staff members, save them a lot of grief, you're going to get a lot more meetings. There may be virtual meetings at the moment. And in times of crisis, the CFO becomes a CFO. CFO becomes a CEO. So every dollar that's being measured at the moment is getting run by the CFO. They're deciding who does what, who gets what, on what allocation, on what timing, etc. So I also think counterintuitively, possibly, and learning to or giving away services, engendering loyalty and reverse psychology is something that I'm seeing working for a lot of people. I'm getting feedback, not only myself, but also a lot of founders and companies that I work with. They're finding that people are paying them earlier because they've done something for free. So it's amazing, how we all galvanize together. Obviously, one of the benefits is going to be, we're going to massively accelerate to working remotely and working out what the teething issues are of that. So people feeling isolated in the US is ahead of us in terms of isolation. Online strategies, Facebook groups, engendering a greater sense of community, starting up your own channels, all that sort of stuff, getting people, helping people, building that sense of community, giving away services, and trying to provide more and more value. And you might even sacrifice margin to win more market share. Another example was a company that I'm looking after that's has 3 major competitors. One turns over about 200 million, the others turn over about $300 or $400 million. And essentially 2 of them are just going to team up and say, look, I've got not enough work, I've got excess work. One's going to do that work at cost, help out the other. If these 2 companies can cooperate and stay together, there's going to be an ability for both of them to survive. So some have got excess suppliers, some have got excess capacity, but if 2 of them team up, one of that third person just going it on their own, I guarantee is not going to survive. because they're not even going to be able to work out how they haven't laid off people. So working out how to cooperate is absolutely key at this point. And that may be that you're the one or two that survive. And then finally, just some